Welcome back to another edition of Special Situations Investing with Greg. This week I will be talking about the tender offer for Petroteq shares currently underway. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Hello investing mutants. This week's video is talking about the tender offer for Petroteq shares from Viston United Swiss AG for all of their shares outstanding, and it looks like it's part of them purchasing the company so that they can get, from what I can tell, they can get the technology that the company has on extracting oil from oil sands. So Petroteq is a company based out of Utah, and it has basically they've come up with a new way to extract oil from tar sands and sandy oil mineral deposits. And they looked like they had some pretty interesting technology that was patented in the United States, in Canada, and then also in Russia. And it looks like COVID-19 hit them pretty hard, and they were not able to execute. So this offer started back in October, on October 25th in 2021, and it's been ongoing since then until, and it'll go on until the 7th of February this next month. The offer is for 74 cents per share in Canadian dollars. So make sure that you, if you're doing your calculations, make sure that you recognize the difference between the Canadian dollar and the US dollar, because I will be using US dollars for my actual transaction calculations, and the Canadian dollar is what this tender offer is in. So it's for 74 cents per share, and it allows them to basically take the company into Viston United Swiss's business. The current price at US dollars, 38 cents a share, makes it so that there's about a 55% upside potential in the company. And that 55% upside potential is on a calculation of about 59 cents per US dollar per share. So if shares are tendered, that's more likely about how much will be put on there. If you are interested in investing in this company, be aware that the shares are on the OTC Pink Sheet market. So OTC Pink Sheets usually means that it's, these are penny stocks essentially. And usually when you look at penny stocks, you need to recognize that there's additional risks just in the nature of the size of the company that are inherent in those companies. At 38 cents a share, you, even with $10,000 or so, $5,000, you would be able to go in and purchase the company and maybe affect the stock price. So just be aware that the share price, because it's so low and it is on the OTC Pink Sheets, it is something that you could affect it. And if you do decide to purchase it, make sure you have some sort of limit order on that, because you don't want to overpay for this, especially since the actual amount that you can get out of it may not be that much. The other side is, if the tender offer doesn't go through, then you're also looking at the potential that the share price could drop. Now, over the past year prior to this tender offer announcement, the shares traded at about 6.5 cents per share. And so that change is would be significant if it dropped back down to that. And if the tender offer did not go through, it would be very, very dangerous for any shareholder. With that in mind, on January 4th, the board of directors did put out their recommendation to participate in this tender offer, and they will most likely be tendering their shares. And it was a unanimous agreement with the board. So this looks like it will be something that will go through. So 55 cents per share, or 55% per share that's available on the opportunity. You know, there's definitely some meat on the bone on this one. In full disclosure, I do not plan on investing in this one. Part of that is because I have a vast majority of my investments of my capital deployed. If I do participate in it, I'll probably try to stay anywhere below 40 cents a share on this. Watching this tender offer has also caused me to change some perspectives on some of my hard lines. One of my hard lines, if you've been watching me for a while, is that I really don't like to participate in tender offers that are outside of the United States. I've had some bad experiences with them. I've had bad experiences with other transactions outside of the United States, and so I just I try to stick to the New York Stock Exchange and the other exchanges as I go about my activities. However, this one was offered on the Toronto Stock Exchange, and the potential for upside on this one was to the point where I have to pay attention to it, because if I was looking back at this one, after the announcement, you could have purchased the shares for about 21 cents a share for about a week or two, and at that price, that's almost a 3-to-1 turnaround. And then, not only that, in December, from about the 7th to the 20th, you could have purchased the shares between 12 and 13 cents a share. And that's almost a 5 times gain in a matter of months. Now, both of those are pre-announcement of confirmation from the board of directors. And the board of directors originally stated that they didn't want people to participate in the tender offer because they weren't sure about that. I think it's kind of a no-brainer if you did some digging into the research on this company. They got hit pretty hard with COVID and had to shut down some of their operations based on the COVID pandemic. And it's an oil and gas company anyway, so they have really bad economics in general. And then they had to shut down right as they were trying to get ready to go into full-scale production. And that, combined with the inability to raise capital, tells me that it would have been a no-brainer that they would have taken this tender offer and moved on. So lessons learned from this one is check out these tender offers. In particular, check out the tender offers that are advertised as TOTs. I don't always look at those as much because they're not usually as attractive or interesting, and I missed this one definitely because of that. And then the second thing is I need to continue to spend more time looking at things that may not always be right on that cookie cutter, it's in the United States Stock Exchange and I'm going to participate in it. In conclusion, if you liked this video, please hit the like button, and if you have not yet subscribed, your subscription makes a difference on keeping me doing these activities. It helps me so that I can actually get some sort of feedback that the stuff that I am doing is valuable content to you. So liking and subscribing is a big deal. And as always, if you want to comment and you want to converse with me about this tender or maybe even other investments out there, feel free to share, and I will take a look at them. Thanks a bunch for watching, and we will catch you next week.